Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 22nd of November here in 2022. Let's get started with this bear market rally, which continues, and we're charting similar bear market rallies, but this is just the beginning of tonight's video. The main focus will be on individual stocks, top 5 and the bottom 5, outperforming and underperforming for this year, which isn't quite done. But let's start right here. We've had 1, 2, count that as a small, but a third. That's a little bigger. That's a fourth. And the current is the 5th bear market rally. The trend is down with a series of lower lows and lower highs. But even with a downtrend, it does not go straight down. Now, the big arrow is going down. The moving averages, the linear regression, all those things are down. And of course, the economy is down. But it doesn't mean the market itself is a straight shot to the downside. In fact, it actually wiggles and squiggles. So we're seeing a wiggle and squiggle, and we like to call it a bear market rally. But that's where we are going into the holiday. How many points has the other bear market rallies gone? Roughly 320. And just being quick with this, just for the video's sake, almost 400, a little bit above 400 points on the second. The third rally was 300 points. This one was a little two-step rally, but we'll call that 550. We had a 400-point rally that took us up to, roughly speaking, 10% gain in the market. But from that, we've seen that was about a 400-point rally. Now we're having a 500, maybe a 550 rally, potentially all the way to the prior highs, which is what happened. Maybe call that the projection high, but it's ultimately what happened in the other times. We saw the market trade up, almost go down, and then hyperextend itself a little bit to the upside. So nothing is surprising about this. It's just a little bit of an extension above where the other bear market rallies have gone, and this is not the strongest rally, at least for the year. But that's where we are headed toward the end of the year in the downtrend. Now, given that the S&P, we're going to talk about percentages and compare strongest and weakest quickly about the S&P, and we can look at the SPY as well. SPY is down about 16%. That's taking the annual start of the year and the annual performance to present as we go to the end of November and into December. It's down again about 16%. But the Nasdaq, we'll take a look at the Qs. The technology sector has been under more pressure. This bear market and the downtrend in the equity market is focused or centered around technology stocks. And that is in large part because, we'll take a look at the TNX. That's a lot of percent gain. But really, this movement is from 3% or 2% down here, 3% and 4% when it comes to treasury yields. And on the flip side of that, the bond market, ZN, it's down a little bit like the S&P, which is off about 12%. The TLT, the bond product, now it's an ETF, different than the futures, but it's off about 30%. So these are the big pictures of 2022 as we go toward the end of the year. Similarly, the big arrow is down, but we have had reversals or retracements. Some of them have been a little larger than others. So just thinking out loud, that's 1, that's 2, that's 3, that's a 4th. That was a big rally. We are seeing now the 5th rally in the treasury market, and it is just about as big as the June, July, and August rally. Now let's get back to the stocks. Which ETFs? Keeping in mind the S&P is down about 15%. Quick note of the annual performance. The financial sector for the year is down 9%. Technology sector, which again is the focus of the bear market, it's down 24%. Y is discretionary. That's going to add in some technology stocks, Amazon and Tesla, just to name 2, which actually are more discretionary stocks. They're retail stocks, not technology. But that entire index is down about 33%. Industrials down 4%. Materials off 8%. Let's come to energy in a moment. These P or staples down about 1.5%. Healthcare down almost 2.5%. Utilities off 1.5%. So the bear market, again, is concentrated in the XLK, which is technology, and the XLY, which is discretionary. The one market that has continually outperformed in 2022 has been the energy sector, and it's up roughly 62% on the back of some performance from ConocoPhillips, up 87% this year, and the other major tech name will be ExxonMobil. It's up about 90%, just about to make a new 52-week high. Keeping this in mind, I'm curious, which are the top 5 performing stocks in the market so far, and which are the top 5 worst performing stocks? This is rate of change. There's all sorts of ways to do this, but this is our quotes board, looking at stocks in the S&P 100, because those are the larger cap names, and just looking at the percent gain or loss so far in 2022. Is there a commonality? There is. ConocoPhillips is up 82%. We just saw that. And then ExxonMobil right behind it, up about 79%, a little bit higher, just the way the numbers are crunching. CVX up about 55%, a little bit higher in terms of today's close, a little bit above that. Nonetheless, these are the top stocks, and behind those 3 are Merck, MRK. Merck is up 42%, and Lockheed Martin up about 35%. Again, today's session not included, but that is where these percentages are from the beginning of the year. Those are the top 5 stocks, and a little bit behind it, just slip under that list. We'll look at 2 others. Eli Lilly, a healthcare name, and then T-Mobile. T-Mobile is a communications company that's just been a steady gainer all throughout this year. One more, Bristol Myers Squibb, and then Amgen and Biogen, technology or biotechnology, I should say, companies. But which ones have underperformed the market? Again, thinking about technology and the higher rates and the effect or the impact that those higher rates have had on borrowing costs and technology companies in general, that goes again to the XLK and the QQQ and other products that are tech-centric. The weakest stocks in this year have been Meta, and Meta has been so weak. I made a joke about this earlier, that they had to change their name. Their stock was the worst stock and remains the worst stock in the S&P 100, at least for year to date. So bad they had to change their name from Facebook to Meta. Can't escape the downtrend, though, and those lower lows throughout that year. Behind it is PayPal. PayPal is down about 60% from those highs, and again, the earlier part of the year. Just comparing the year to date, Tesla is the 3rd worst performing stock. It's down on the year-to-date basis about 57%. Netflix, we saw it fall precipitously, but this fall began before this year, and some of the other tech stocks did top or peak or reverse in the latter part of 2021. So you're not even getting the big picture of what's happened just looking at the year-to-date performance. Netflix takes the 4th spot. Right behind it is NVIDIA. And NVIDIA has had plenty of bear or short sell opportunities throughout this year. And then the other stock to look at, just sneaking under the top 5 point, would be Amazon. And then Intel shares as well. So these are the top and the bottom in terms of performers. The connecting the dots is that energy, again, bigger performer. And the leading stocks so far have been energy components. Weakest stocks have been technology. And some of those have been big names, big market cap. Meta, Tesla, Netflix used to be. NVIDIA, Amazon, and Intel. And behind it, other stocks you might be familiar with that have downtrended in this year are Disney, Nike, Google, Qualcomm, and some other retail names and tech names. There's Microsoft and some of the others. So what is the main idea? As we're continuing through 2022, these trends or these plays or relative strength, which is in the energy and some other sectors, the defensive names, that's where you'd expect the performance to stay flat. That's what we'd expect. Healthcare, staples, and utilities are defensive or risk-off names in the midst of the bear market. These have been mostly flat, and the opportunities have been long and short here. Now, as we go through the remainder of this holiday week, with Thanksgiving on Thursday and a half trading session on Friday, there's something unique to take a look at. Don't get too complacent, because Wednesday will be a holiday type session And in terms of the expected move, just looking at the S&P, and we'll look at some others, the SPX, our S&P index, has an expected move of about 40 points. The S&P itself, the futures contract, similarly has a 34-point expected move. The Nasdaq, the tech-centric stock, or the index, has its expected move for tomorrow at about 121 handles. If it were any given day, that would not be surprising, but we have news reports and the Fed minutes. Just before we go at the end of the video, we've talked big picture. Let's talk quickly about Wednesday and Friday. The FOMC minutes, that is what the Fed announced, or the minutes of the meeting of their last announcement, where they did raise those interest rates 75 basis points. We're going to hear what they said, anything about the inflationary projection or the outlook and the economy. So that could be a market mover just by itself, but that's not the only thing taking place. Tomorrow, we're going to have the consumer confidence, a University of Michigan consumer confidence survey. Not usually a market mover, but throw it in the mix with the others, which would include new home sales. These are, again, the pre-market, new home sales. And we'll also take a look at PMI, consumer composite flash, PMI, the composite purchasing managers index. That will come tomorrow before the market opens. So these things are in play in a expected move or volatility condition that isn't pricing in that much, and maybe we don't move that much. But just know that tomorrow could be a volatile session that could be a surprise if these events or these news events, headline news, headline risk, surprise the market in any way. And we've certainly seen that recently. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for November 22nd, 2022.